again with another of our Evolution Consulting market updates as they've come to be known. This one being recorded during trading hours on the 19th of July, 2016. All right, and we just did recently we did a sort of a market update video. It's really one of the only gratuitous self-promotion pieces that we've done, which was for our newest publication that we're offering for active traders. Okay, active traders, active investors, folks that are really interested in kind of the mechanics of the market. All right, check out on our site. We have a new tab on the main menu. It's marked publications, and there you will find something called Switch and Signal, so named for Westinghouse's a Union Switch and Signal company. Circa the Industrial Revolution, and that is our newest publication. That is our active trader guide. If you want more information on that, please watch the video chronologically prior to this on YouTube, and we will tell you all about that. But we did, given everything that's going on, certainly want to get a market update video out there that is more relevant to a lot of the stuff that we've been recommending in terms of equities. Certainly, we're going to talk about two of the three C's of our investing strategy, which is commodities and chaos, of which both have been paying huge dividends for those of you that have been following along, listening to our recommendations, certainly since our system recalibration right after January. Is when we started using a lot of new algos, and then right around February, March, April, I mean, we got some great entry points on a lot of different equities. So we like to think that those that are listening to our stuff are up in those trades and are very thankful for that. If you would like to say thank you, once again, Tommy Bahama shirts and Scotch. Okay, those are two very, very, very appreciated ways of saying thank you. But in the meantime, we're going to talk a little bit about where the market is at in terms of technicals, and we're going to talk a little bit about where the market is at in terms of really what we trade, which is the news cycles, which is geopolitical events, social events, and what we like to call the perception trade often. But first thing is first, our metals ETFs, again, post-Brexit metals environment are very different. For those of you that have been paying attention, by the way, the price action on the spot price of metals, not talking about the metals ETFs, but the spot price of metals, the pricing action that's been on the spot price of metals, and there's a few guys on Twitter that have noticed, okay, has really told the story as to how significant that Brexit vote was, and it is exactly as we forecasted, which is the City of London decided to get off the sinking ship that was the Anglo-Western banking system and join and board the ship that's about to sail, which is the BRICS nation. So, and that can be seen in the spot price of metals. We've seen that attempted metals repression. It just doesn't have nearly the effect that it used to, if any at all. I mean, intraday, if you look at a spot price gold or a spot price silver chart, I mean, we forecasted that the new normal for metals post-Brexit would be about 1375, coming up on 1400. Now, it did come pretty close to 1400, okay, got pretty high into the 13s, but there was that inevitable pullback, and that's okay, and that's to be expected because that is the hype cycle. We kind of built that into the equation already, all right? But you can see metals now holding that 1340, 1350 level. That is invariably the work of the Shanghai Gold Exchange and the City of London, now both playing from the same sheet of music and both playing on the same team. Nice touch, guys. Okay, so those Fed COMEX, I think they called them smackdowns, where some of the guys on Twitter called them metals price smack. They don't work anymore. They're laughable, they're pitiful, and they're obvious. And you can actually see it in an intraday chart where it just goes like, and it goes, shoop. It's like I said, there's some guy on a trading desk somewhere in the SGE that just pushes the I don't think so button all day. Okay, and we call the City of London and the Shanghai Gold Exchange, now we comically refer to them, we use a video gaming term, we call them Team Button Masher, because anytime anybody tries to sell naked shorts now or do any of the metals manipulation that may have worked in the past, it's like Team Button Masher just starts hitting the plus 50, plus 100 button, and you just see it, whoop, you come right back up to those new normal levels, okay, or what we're calling pre-next catalyst levels. But let's go through a couple of our convert paper into more paper and then into metals plays that we have become, actually starting to become fairly well known for. All right, but we have, and by the way, the reason we're talking about these now specifically is we're at Dow 18.5, okay? We're at S&P 21 who knows what. All right, I hadn't looked at the S&P, but we're talking about U.S. domestic capital markets, guys, that are approaching all-time highs every single day, or they're going through making, I should say, all-time highs every single day. Okay, the reality of the situation is, as they start to approach those highs, it's as we forecasted. Okay, it's short attention span theater trading. I mean, the market dipped like 900 points on the Brexit vote, and that was over and done with in like a week, as we forecasted. Surprise, surprise. That was number one. Number two is that we're starting to see that flood of liquidity starting to come in now, just now, the very beginning of it. I've been saying this for over a year. Once that little bit of liquidity starts flooding in, the tsunami tidal wave of additional liquidity, it's got to go somewhere, and it's a product of ECB, what's left of the European Union. It's the product of the ECB. They're going to start with the quantitative easing because they have to. They're going to start with the stimulus because they have to. Okay. As far as the Federal Reserve goes, the U.S. Fed, COMEX system, really the Federal Reserve in the context that we're speaking about, they're going to follow suit, okay? That's a sinking ship, all right? And they're going to follow suit, and they're going to print to infinity, and that's just the way it is. Continued lax monetary policy, continually extended low interest rates, etc., is going to drive the markets higher. We forecasted that, okay? Dow 19,000 within the next month or two, that's a real number. That's a real probable number, and we're going to say it now. We're going to go on record, okay? That's a real probable number, and as we've said, as early as 2014, that move from 18,000 to 20,000, that's going to be remembered in history as when it all started getting very interesting, all right? Because now you're talking about unforeseen, completely new territory. All right, but back to our metals trades, okay, in the interest of converting paper into more paper and then into metal so that we are financially viable both before, or I should say before, during, and ultimately, certainly after the GER. So we take a look at, and we're going to start whizzing some charts across the screen here. We take a look at JNUG, which is one of our favorites. It is a Direxion triple leverage gold miners fund. Excuse me. And last check, which was a couple of minutes ago, it's at $272, which is up from its below $200 level, just below 200, right prior to the Brexit. So if you followed our advice and you listened to our forecast prior to the Brexit vote and you got long all these metals plays, once again, Tommy Bahama shirts and scotch. Please, thank you. But we're looking at technical resistance at the 300 level. Okay, 300 to 320. There's going to be a little bit of technical resistance there. And again, we don't put a lot of confidence in technical resistance for the sake of technical resistance. Okay, but as a perception trade, what are other institutional traders and what are other retail traders going to be looking at? And certainly they're going to be starting to notice that it's coming up on that top trend line, and maybe we should, maybe it's going to top out or whatever the case may be, and we'll get to that in a second. However, JNUG, what we're going to recommend, like all the others, is just tighten up your stops, okay? And if you've been in that trade, by the way, either since March when we recommended it, okay, or certainly before the Brexit vote, you got a hell of a nice return on investment going on, okay? So take some of that, go down to your local coin shop, go buy some metals, go buy some silver, go buy some gold, all right? And that's the whole point of this exercise. We don't pretend for a second that paper gold investments is investing in gold. It's not. You're just using a catalyst of market manipulation, metals repression, or what's going on to convert your fiat currency, dollars, euro dollars, Canadian dollars, Swiss francs, South African rands, whatever you got. You're just converting that into more paper so you can go out and purchase physically good delivered metals, which brings us to NUGT, the other of the two triple leverage Direxion gold miners funds, which the last we checked a couple of minutes ago was at 152, and that was prior to the Brexit. We were like at $100 a share, thereabouts. Okay, 100 to about 110. Okay, and we got technical resistance, or at least illustrated chartography, technical resistance at the 170 to 180 level. Again, we do not put much confidence in technical resistance, all right, because we're talking about a commodities play, a triple leveraged commodities play in the geopolitical environment that we're dealing with now, all right. So the technicals become secondary to what I call the hype and crowd trade, all right, and the news trade. So, but in the interest of being complete, all right, we're at the 152 level, guys. If you want to take a little bit, go down to your coin shop. You want to take the whole thing out, take all your earnings, go out and let the original principal ride. Go for it. All right, greed is good, guys. Greed is good, but then again, pragmatism has its place. All right, so the 170, 180 level on NUGT is going to be where you're going to see a little technical resistance, which brings us to USLV. Another of our silver trades that we like, paper silver trades, all right, and that was prior to the Brexit. We're about $16. $15, $16, and then Brexit happened, and as we forecasted, silver just went completely vertical. We're at $26 a share now, give or take a few pennies there, with technical resistance illustrated at 28. All right, there's another one. Take some of it, take all of your earnings, take a portion of it, and that's up to the individual trader, and that's up to the individual investor. I'm not saying take 50%, 80%, 90%. You decide what's right for your individual investing circumstance, okay? But what I am suggesting is really think about that. Take some of the earnings that you've made and go buy the physically good delivered metals. That is the whole point of what we are doing here. And then we talk about another chart flying across the screen, and we have GDXJ, which prior to the Brexit vote, we were talking about 39 to about $40, and that's just coming up in a mid 48 level. Right, that was a solid move. Okay, with technical resistance illustrated at about 50. Same story, which brings us now to exactly why I keep saying you might want to let some of that principle ride. You might want to let some of that principle ride because of exactly what we're about to see in this SLVP chart. SLVP was at the $11 to $12 range, which is right on technical resistance. It was right on sitting on its technical resistance level prior to the Brexit vote. And then the Brexit yes vote happened, and all of a sudden we're talking about $15 a share. So it waved bye-bye to any kind of meaningful technical resistance, and it is deep well into breakout territory. All right, it's still going. Right now, what drives these metals prices higher, and by default, certainly is going to drive a triple leveraged or even a single leveraged metals ETF higher, guys, are these catalyst events. Okay, and right now we're in an environment where the market's at. I have to quote a good friend of mine that I worked with in the boat business. Again, I like to credit the source when I do hear a good quote, but he used to call it boogie heaven. Okay, we're at market boogie heaven levels. Okay, and that is just absolutely astronomically high. All right. Most of these other ETFs, apart from SLVP, are on or at their technical resistance levels. What does that mean? That means we tighten our stop losses up. Okay, we want to protect our earnings. You don't want to give it all back. I mean, we learned that the hard way during our simulated trading event. You don't want to give it all back, but you also don't want to scale completely out and sell out your position entirely, because with these metals ETFs sitting at the technical resistance levels that they are, they're lining up and setting up for what could potentially be a catalyst-driven breakout. All right, and what could that catalyst be based upon our information right now? And we're surprised, by the way, that the mayhem going on in Turkey didn't have more of an effect on spot metals pricing, really. But in terms of what could be a next major catalyst for metals, to all these metals ETFs to head into breakout territory, all right, is probably we're forecasting either France or Germany or another European Union nation going, you know what, F this, we're out of here. Okay, we've seen rumblings already that it could be France. All right, they're going to put a formal referendum up, and after what happened in Nice, okay, it wouldn't surprise me. I think they're just getting a little sick and tired of playing by the EU's touchy-feely rules and regulations. All right, eventually you're going to get a populace that's just going to go, you know what, we're done with this. We're going to do this our way. So France, especially with the Nice attacks, okay, that would be one that we would say European referendum vote probable at this point, and we've already seen mentions of it, or Germany. Germany is the one that we're forecasting to go first. Believe it or not, we could be wrong. We could have those backwards, but the linguistics are both suggesting, or the linguistics, I should say, are suggesting that both of those are going to pull an exit stage left, just the way the UK did at some point. It's going to be an official referendum vote. All right, that's the kind of event or the announcement or the rumor. Keep in mind, it doesn't really have to happen, but the rumor of such an event, such a French referendum vote, that will be enough to drive all these ETFs, these metals ETFs, into boogie heaven breakout territory. And once these metals ETFs get out and the spot price is going to kind of move up with them, either at 1400 or beyond, guys, that's dark territory. That's unknown, unexplored, and with that continual hype cycle, there is momentum. So what we're suggesting is just to once again go down, go down this list here. Tighten up your stops. do leave some in. I know, you're looking at like in some cases, some of you guys could be looking at 2, 3, 400% returns on investments. If you were in this stuff since March and just left it there, we're coming up on 400% return on investment land. I know you're looking at that saying you just want to take that whole principle out. Please don't. You take a portion of it, but do leave some to ride. And the reason I say that again is because one catalyst event, just the announcement of it, puts all these in breakout territory, and then it's like, see you later. Okay, so that is our first C. That is commodities. We are going to do another video, by the way, on oil. We didn't mention UWTI, but let's talk about another kind of trade, and that is the chaos trade, okay, which is kind of our name for the defense sector stuff, or a portion of the defense sector stuff. And we look at Smith & Wesson, SWHC, and we look at Ruger, which incidentally, not surprisingly with the market, headed towards boogie heaven, we're looking at, we're about Smith & Wesson, $28. With $30 is showing kind of technical resistance there. And we got Ruger at 66 with a $70 kind of sort of technical resistance happening there. Again, these are not equities that are playing by the rules, okay? As we said, these firearm stocks, including Taser, by the way, we'll talk about that in a second. But like we said, they wake up every morning, they must listen to a healthy dose of Phil Collins because really they don't care anymore. And the reality of the situation is, guys, with what's going on, and I don't think I need to really speak too much about this, but just to illustrate the point, we have as we forecasted, the shooting events now are happening like more than once a week. We've been saying this since 2014, and we were absolutely friggin' spot on. And we said as it gets closer to the elections, things are going to get more and more out of control. So, a pat on the back for us there, okay? But in terms of Smith & Wesson and Ruger, okay, if you're not in those trades yet, okay, and what I'm about to say is going to sound insane, or very sane, depending upon, your thought process. If you're not in those trades yet, and we recommended those, I mean, you can see what's happened since, like, Baton Rouge, and since Orlando, the Pulse nightclub, and all those kind of deals going on there, okay? If you're not in those trades yet, do get in those. You can scale in at current levels. You can take a position at current levels. And you got to be like, what are you out of your mind? Markets, you just said, markets at boogie heaven. Why would you take a position now? Because these are equities like the metals ETFs. They're not playing by the rules. Okay? If you don't think that all the talk of firearms legislation, we've said this a million times, if you don't think all the talk of firearms legislation and the absolute, especially heading into a general election cycle, guys, just keep in mind the two narratives that are going on. You have the extreme left, okay, that's going to want to ban everything. Ban everything. Anything that even vaguely looks like an AR-15 or fires a .223 round, that's going to be a hallmark of the Hillary campaign. You already know that. And on the other side, you got like the Ohio, Minuteman militia showing up, open carrying ARs and AKs and all that stuff, all right, with Trump and Rudy Giuliani, his nationalistic, I mean, that was a hell of a speech last night, agree with him or not, and we're politically atheistic, but I want some of what he was on. I mentioned that on Twitter. I said, whatever Rudy was on last night, I hope he brought enough for the whole class. That looked like fun. But that nationalistic, fiery rhetoric, okay, is going to also drive gun sales. You have two catalysts driving gun sales for two completely different reasons, but the end result is the same. You have half the voting public's going to want to ban everything. The other half is going to buy more because they're feeling so patriotic, okay? And that ban guns thing is going to drive this, the right wing to go out and buy even more guns because they're patriotic and they're going to buy guns out of spite and they're going to show everybody just how American they are. Okay? So the reality of the situation, guys, is there is so much upside potential for Smith & Wesson and Ruger. Okay? That it's just, again, I know it's current levels. All right? We're going on record for this one. Current levels. Because those have all the breakout potential in the world. They really do. The next quarter earnings, if you don't think as a result of stuff like Baton Rouge and other events like that, and certainly now heading into the general election cycle where that rhetoric, the ban guns, buy guns rhetoric is going to go, they're going to be sitting back, relaxing, and laughing their ass off because their sales numbers are going to be astronomical. All right? In Pulse nightclub alone, what happened in Orlando alone is enough to drive gun sales, but now it's like once a week. And now with the Black Lives Matter versus police, which is really just a different packaged version of Republican versus Democrat, okay, it's that divisive polarization going on. I mean, you can almost see the two different sides. You have Democrat and Black Lives Matters, and then you have Republican, which is the buy more guns crowd or police side, okay? The reality of the situation is what's going to happen there is just an absolute perfect storm for gun sales. All right, for firearm sales, all calibers, all classes, especially the long rifle stuff. Okay, and especially, I mean, I could say the same thing about pistol. The concealed carry and the open carry stuff. All right, so along those levels there, guys. I mean, if you're already in those trades and you got good earnings in them, please do tighten up the stops. Okay, but that brings us to another one, Taser, which is one that we're particularly proud of because we recommended Taser down like around $15, $16, $17, that range. And last we checked, which was about 5 minutes ago, we're talking about $28.15. Okay, that is right through, not by much, but right through the technical resistance of $28. So it's an example of we often joke around. We say Taser must be listening to Phil Collins because they don't care anymore. It's just going, and that's really been. I mean, our timing was just flawless on Taser, and that's not. I'm not going to make a smug face, but we're very proud of that call. I mean, we would just, if you guys go back and you look at when we recommended it, I want to say March, April range. It's just been vertical since then. So, but that Taser's through technical resistance. And there's a reason for that, guys, just so you understand how we put our trades together, okay? These Black Lives Matters and police type shootings, okay, that's going to drive Taser's primary business at this point. Yes, they're known for making the gun zappy, incapacitator devices or whatever, and then certainly sales of those are gonna go berserko because of what's going on. I mean, like I said, this election cycle, guys, I try to keep these videos clean, but sometimes I do have to just bluntly tell you the way it is. And let me tell you, what's gonna happen this general election cycle coming up with Trump and Hillary is gonna be a shit show. It is gonna be a shit show to end all shit shows. Let me tell you. All right, so. If you don't think that the demonstrations, the protest, combined with the Black Lives Matters things and all that stuff is going to drive that zappy incapacitator non-lethal business, it's going to. But more importantly, it's going to drive the police body camera business. Okay, with what's going on out there, and I'll be the first to say, guys, it's screwed up. What happened in Baton Rouge is screwed up. It really is. I don't know how to put that any other way. It's getting ridiculous. But we forecasted this stuff. We did. We kind of saw this happening, and just went. It's, again, guys, it's an inevitability, all right? So reality of the situation is, here's the deal, okay? Police body cameras were a luxury and a politically correct way of showing that a department is accountable and warm and fuzzy and touchy-feely, all right? And departments with large budgets would typically purchase them. As a matter of fact, Pittsburgh Police Department recently purchased a whole bunch of body cameras, okay? NYPD, LAPD. I'm sure like Houston, Dallas, Miami, those bigger cities with those budgets and they have a whole PR, sensitivity department, all right, are going to purchase those as more of a PR stunt than anything else. Okay, but now with what's going on in places like Baton Rouge and these mid-sized suburbs and small towns all over the place, guys, that Taser body camera business is going to be. It's not going to be the exception to the rule anymore. It's going to be the rule, and right now. Based upon our research and our network of experts, Taser has a number of traveling road shows going from department to department to department in this country now, and they're soliciting no bid, no compete contracts, and they're getting them. They just got one for LAPD for, I don't know, like $30-some million, I want to say, to outfit the entire LAPD with the Taser square chest-mounted clip-on body cameras, okay? They have that ability. That is a big enough company with enough established connection that they can do those no bid, no compete contracts. If you're familiar with the defense sector and how that works, that's a pretty sweet deal. You're not bidding for a project. You're just telling them how much it costs, and then, they're paying it. There is no other competing bid. So to call it a bid is almost hilarious or contradictory. But as those departments start going with those no bid, no compete, and they're getting federal funding to do it, okay, Taser is going to report asinine earnings. We're not going to speculate as to earnings per share or anything like that yet because legitimately we haven't done the research. But based upon our macro analysis, guys, the earnings that Taser and Smith & Wesson and Ruger and all these smaller tactical either firearms manufacturers, even FLIR is another one. We were a dollar off on FLIR as far as buying the dip on that, where we said to put the buy order. But FLIR is another one that's just going vertical. I didn't make a note of exactly where it's at now, but take a look at the FLIR chart. I'll put it up in the edit. From when we recommended it to now, I mean, it's looking great. Again, that's what we mean by that whole World War III thing averted. Dollars are shifting from those big standoff grade complex, intercontinental missile programs, like stuff like that, and it's going more towards the individual tactical, um, dealing with civil unrest type stuff. Okay, and of course, Trump's border wall was another one. All right, you look at Trump's border wall, and it's like, yeah, they're gonna need a butt ton of FLIR equipment to outfit a 1,000-mile long wall with surveillance capability. So, whether or not he really builds that wall, and by the way, if you subscribe to Wirehouse, or if you purchase Switch and Signal and got the free copy of the June-July edition of Wirehouse, we outline in detail exactly how that wall can get built and how Mexico can and probably will pay for it. And we got that information from one of our experts, and even we went, really? It was one of those. It's one of those wowie zowie moments where we were just really excited to do that piece. So, if you do plan on subscribing to Switch and Signal, you will enjoy reading that article. We enjoyed writing it. But FLIR is another one. Okay, so point of the story, guys. Even though the market's at boogie heaven, you can see even with the market doing what it's doing, a lot of our picks have outperformed. And that's the point of what we're trying to do, because we're leveraging civil unrest and chaos, because guess what? You can take that paper, turn it into more paper, and go buy some physically good delivered metals with it, okay? Or you can complain about it, all right? We like our approach better. We'd rather not complain about it. We'd rather just make a buck and, off the inevitable, as we like to call it, and, life goes on. The metal stuff, same thing, outperform. The whole point of what we're doing, again, please, if you're up in these trades, and a lot of the trades we've picked, I mean, it's been freak show accurate so far, and it's going to continue to be freak show accurate what we built here. I'm in awe of it. But as far as what we're doing, please do continue to convert paper into more paper, into metals. Questions, by the way, comments, bitches, gripes, moans, and complaints. Well, you can save the bitches, gripes, moans, and complaints, because much like Phil Collins, I don't care anymore. All right, but if you do have any questions, ideas for us to research, we usually get some really good ideas from our Twitter followers as to stuff to research, as well as from we've been getting barraged with emails after we were right on the Brexit vote, so it's been pretty cool. I just feel free to email us. It's info@evolutionconsulting.world, info@evolutionconsulting.world, or you can follow us at @evo_consultants, @evo_consultants on Twitter. That's really more of our instant gratification, day-to-day stuff. We do use Twitter to timestamp all of our recommendations for purposes of record keeping. But again, if you have any questions, suggestions, or ideas for us, please do email us. We enjoy hearing from those that read our stuff. And guys, to be quite honest, I hope you guys are making money along with this. I really do. I hope you guys are getting paid like it's your job. Okay, because what's going on in the world, like I said, there's two kinds of people. You can complain, you can bitch, you can whine, or you can make a buck and you can prosper and you can thrive. Those are your options. Okay, we prefer the latter. All right. So with that in mind, be good. Everything really is a transaction.